Hello, everyone, and welcome to another episode of Trading Spaces. This is number 27, and we're coming in hot off of both the Fed rate decision and a GDP print and the PCE inflation print. So loads going on in amongst yet another chip sell-off. So expect a bit of volatility, and we're already starting to see that today. What we're really going to be chatting through in this episode is whether we've got, some actual relief for risk assets, and this can follow through into crypto markets, or whether this is a temporary reprieve. So we'll go through all of the big ones, and we've got a few specific charts that we want to dig into, and we'll touch on some of the most important news that's come on the macro side, because this has absolutely been an important macro week that's going to shape probably the trajectory of the next few months and year. But before we do that, quick disclaimer. Of course, everything that we discuss here is purely for educational purposes only. None of it is financial advice, nor should be taken as financial advice. Den, how you doing? You enjoying the heat?
Yes, we're back. Well, it's actually really comfortable right now where I am, temperature-wise. Market-wise, it was very boring, as you guys all know, I'm sure. But I think we're seeing a little bit of movement today, so that is semi-exciting, very microscopic movement if you zoom out, but we're happy with anything at this point, I think. How are you?
Yeah, I'm good. Well, I was absolutely melting yesterday here in the UK. But yeah, we've cooled down now, just in time for a nice, brief green candle across a few charts at least. So we have a few things to talk about. But I think the first thing that we should really touch on, to be honest, is no surprise, it's my favorite topic, the macro setup. And it's been a while, really, since we've had much to talk about. We've had Fed Chair Wash not long come in, so it's kind of been in a bit of a holding pattern. What's going to happen? Is he going to be hawkish? Is he going to kind of be seen as, I guess, like Trump's puppet, or is he going to be independent? And I think this is like now all come to the fore, where we sit and we had the Fed rate decision yesterday, which was the first one that Wash was sitting through.
Yeah.
Now, this is an important one because I think what Wash has been really pushing is that they were going to ditch all of the forward guidance, and what you and I, Den, would often be on this podcast discussing after every Fed rate decision was like, what was Jay Powell saying? Did he sound bearish? Did he sound hawkish? And so I think like Walsh came in and said, hey, we're going to get rid of all of that. We're going to ditch all of the Fed speak, and just focus on delivering what we know today and being transparent about it. But what we saw yesterday was like, as expected, the Fed decided to hold rates steady. That was at least the consensus. There was a decent amount. I think it was a roughly like 30% was priced in as like a hike yesterday. So not an insignificant amount at all. But it's what we would call like a hawkish hold. So they held rates, but it was 9-3 with three FOMC governors like voting to actually raise rates during that. So there's some split there in the voting.
And it was a high
Now,
amount, right? Three.
that is a high
Yeah.
amount. That is a very high
Yeah, yeah,
amount.
yeah. Compared
Like
to the previous ones and whatever.
definitely, and especially when you think about a new Fed chair coming in, what you would often see in those kind of situations is a little bit of consensus forming early on.
Yeah.
And to be
Peace at the
honest,
start.
yeah. So, but this is kind of seen
Yeah.
as a positive thing because a positive thing in that there's discussion because then you can at least say, okay, well, this isn't just like one man that is able to control and sway the vote. At the end of the day, the Fed chair is powerful and holds sway, but if any one person can sway the vote, it kind of defies the whole point of having a committee. So to see some difference, there's been some challenge, etc. We can infer a lot from that around, I guess, a bolstering of the Fed's kind of independence, if you like, which has been coming into question a lot. Now, where I think this kind of all fell apart, really, and bear in mind, we've been coming off the back of some favorable inflation prints. We had like a reduction across CPI, PPI in the last episode that we discussed that, and that was taken very well. It's a surprise. And further bolstered this idea that the war in Iran has largely had transitory effects on inflation, meaning it is short lived. And when that goes away, as we saw with Brent crude and WTI pricing, that it settles. And we saw Brent crude come down to what, 72, $70. And then just like clockwork, we have a giant ass conflict happening again, and it feels like that is going to get bigger with, I think, the US strikes this morning in retaliation to somewhat unprecedented Iran attacks, unprovoked on US military bases. So we saw oil start to make a move upwards, passing 80 on the Brent crude. I'm not sure actually what WTI is, but it'll be following the same direction. So all of these things, when oil goes up, inflation follows, and typically, while we haven't seen this all throughout this year, high energy, high oil usually is a headwind for risk assets and equities growth. So outside of obvious sectors like energy sectors, etc. So we didn't necessarily see that in the past few months, but I think when you kind of come into this, you're like, okay, well, maybe like there was a bit more leeway for the Fed to hold rates, and when we had like Warsh sharing his comments after, I think everyone was expecting something very brief, not a whole lot from there. And it was kind of this like weird, verbose, like somewhat contradictory speech at times that markets didn't really love. Like he was like kind of all over the place to be to be
Hmm.
honest. Like he was mentioning about what they will be looking at, right, for assessing the next rate decision, which is kind of something that he said they were going to explicitly avoid doing. And he'd said,
I was gonna say,
PCE.
yeah.
Yeah, that's exactly what they said they would avoid, right? Um, and he said, "Oh, like PCE is the favored measure," and then like at another point, he's like, "Oh well, there's actually a load of other measures that we're going to take a look at." So it's kind of contradictory. The other big one I thought that was the standout on my mind is he was talking about like the 2% inflation target that the Fed has, which has basically never been hit for the like 5 years. And he doubled down. He was like, look, I want to make it clear that there is no soft target that we have. Like, there's no such thing as like, oh, well, we're trying to get to like 3%. It's like the Fed's mandate is to get to 2%, and we won't stop until we do. So then it begs the question, why the hell have you held rates, right? If that's the case, because everything would
Mm.
tell you to hike. Um, and markets didn't like it. You look at long end
Oh, ES
yields.
was down a lot
Yeah,
yesterday night. It was like
understandably. be-
1.88% or something.
Yeah, it was and ES has actually fared far better in the past week versus the Nasdaq, which has ultimately been hit with this separate wave of like real worries about capex spend, which came around the time of Alphabet's earnings last week, where they kind of said they were going to spend I can't remember the exact figures, but a lot more on capex, even though they grew their cloud business revenue by like 80%, and then the market sold off on them. But like the key thing in all of this is after the Fed decision, the long end yields, so 30-year yields, spiked, and like they hit the highest rate they've hit in 19 years. That is a a huge thing to happen, because what it says is, and what you're looking at in like long end yields, is the market's expectation on the future rate of inflation. And it will pay more on the long end of the yield when it expects inflation to remain high over a longer duration. So I think this is like a key thing. Um, so when you now look at things, and I promise I'll shut up in a minute. But like the September meeting is the next meeting, so we've got a little while to go. Quite a lot of data up until then: PCE, CPI, PPI, a couple of those actually. The rate hike odds for a single like 25 bips rate hike are now just about 60%. And when you zoom forward, I think we've got three more Fed decisions. I think it's September, yeah, it'll be October and then December. And I think the October one might even get moved slightly because of the election stuff. But by the odds of there being no rate hike now by end of year are just 18%. And remember, like we were talking in January about, will we? It was like, oh, in May, when Wash comes in, we were talking about this June meeting as being like a lock-in for a rate reduction. So this is like a complete U-turn on the year.
Yeah,
So,
seems in
like,
line with the whole um, everything since Trump, right?
yeah,
U-turns on U-turns on U-turns.
exactly. And well, we've also had tariffs resurfacing as well. There's just
Oh
a
God,
lot,
I didn't even see that.
I know, yeah.
Not
So
the tariffs
the
again. Oh
The
my God.
tariffs got sneaked in. I think this is going to become a much bigger discussion point, that actually the whole Iran war and all of this, like around inflation, has kind of papered over. It hasn't been as big news as it actually, I think, should be, because Trump has found a new way to invoke tariffs on like that is outside of the reciprocal tariff level, without getting kind of too boring. But so then we come to today, and what we're looking at today, right, is okay, so clearly what is important here is inflation to the Fed. That is front and center. I think they've been generally happy with the way that the economy, the markets, the job markets have typically been going. We've had some very low jobless claims. Not that people care that much about that number, but that's a good thing. So then PCE comes out today, and we hit expectations, which is not bad, is what I would describe that as. I wouldn't get as excited about it as I think some people are. The best thing about it is that if we look at like headline PCE, and PCE is important because it is and has historically always been the Fed's preferred measure of inflation. headline PCE, 3.7% year over year. Core PCE, that's with energy, food, etc., stripped out. That's 3.3%. That's the important one to really look at. The good news is month over month that core PCE declined, 0.1% increase versus 0.2% estimated. And the last month it increased 0.3%. So we are seeing the slowing of inflation month over month. That's a good thing. The one bit of bad news that kind of went under the radar, I think, is like we also had GDP come out for Q2, and that actually missed estimates, 1.5% versus 2%, which is quite a sizable miss, to be completely honest. But I think with inflation being at the forefront of everything, it's hard to see with the way that the committee is leaning with inflation, while it is not getting worse right now, it's not necessarily like it's pulling back. Um, it's hard to say that we see that we wouldn't at least get one rate hike. And I think from my personal perspective, I think we see one rate hike by the end of this year, probably not any more than that. And I think it comes in September.
Mm.
So we'll see, but I think this is the setup, and I think markets are kind of shrugging that off right now. At least the early response has, but maybe this is where we can dig in now into the likes of
Yeah.
BTC and see how what the early response has been here.
Yeah, it's always so interesting, right? Because you have the immediate response and then you have kind of like the digestion of it. And then
Mm,
eventually also sometimes things gets priced in, especially if it's that far away.
yep.
So that's definitely going to be a super interesting development to check over the next coming weeks. Because you said we had nothing coming out for a bit, right? So that
Yeah.
will definitely give the market some, yeah, some real room for the digestion. I mean, listen, this stuff is still so choppy. Look at this. I mean, listen, the range on Bitcoin, I will say, is beautiful. I think this is super clean. Also, on that pre FOMC dump, we held that mid range very beautifully.
Yeah.
But I think now we're kind of doing the same thing, right? Can see the EMAs is really giving no trend. They're flat, they're choppy, they're switching orders. And we have that April 2021 high that has been so pivotal. Also now kind of, on the lower time frame rejecting price. I will be more confident on the shorter time frame if we can, finally like do something like that. But even then, it's just it really feels like we're doing that last leg of the bear market, right? I was saying to a
Mm,
friend in Discord today, I said that I think we either do chop one more leg down, low volatility, or we do a little pump and then a leg down, low volatility. Either one of those has my vote, and I'm happy to change my mind if we start reclaiming some of these. But for now, honestly, yeah, it's giving bear market until it isn't. And for now, the
the
confidence is just
65K mark seems like an important point for
super
BTC, at least in the
important.
in the short term, for us to get over convincingly. But it doesn't seem like we're
No,
ready to
because
do
look,
that,
this
at
is,
least.
I completely agree. Like, this is kind of like that floor, you know?
Hmm.
When you look at the weekly chart, I really love drawing like that body of the candle, which I usually don't do, but for the weekly I really like it. And it comes in, like you said, around 65, 66, which is
Hmm.
exactly what we are battling right now. And until we can do that, it's just not really a high confidence scenario for me in anything, right? Because the EMAs are so choppy, so there's no trend. So either trading it up or trading it down feels not really like something I want to do. We also have like resistance really close, but then also support really close, which makes like such an awkward trade, right? Which is why I actually would, if I would do anything, it will be Ethereum over Bitcoin 100%.
I think that
But you
might be
can,
the first time we've said that in
yeah, I
quite some
know.
time.
Well, I will actually show you ETH BTC in a bit, which paints a bit of a picture to that scenario as well. But I think with this, it's just the same story. And I actually was very surprised because I woke up and I saw this candle, like this bullish action of this candle. It was, of course, like pre FOMC, happens in the night while I was sleeping, and I woke up and I was like, oh, okay, that's a strong candle. But then, of course, immediately invalidated it the next day. And I think that, I think there's like two camps of people currently. One is saying like we're coiling on a resistance, which is like bullish, which in general I do agree with. But then the other camp is saying that it's kind of starting to look like this, right? Which
Yeah, just
also,
rejecting the high.
yeah. So I can see kind of both scenarios. I think for ETH, if we could do like a convincing reclaim of this, and I like the gap fill trades. But until then, this is just like Bitcoin. It's not really, the lower time frame doesn't show it wants to trend in any way yet. Much better structurally though, I will say, than Bitcoin, which is
Yeah,
also why it would have my preference for sure.
this period that we are in for the past week or two on Bitcoin feels a lot like when we had the first kind of drawdown, going back now to when was it? Was it after January? And we were just kind of like starting to gain a bit of momentum, and then we traded
This
in that
one.
like yeah godforsaken range for a while,
Yeah.
and it's
Yeah,
like,
yeah.
are we kind of going? Are we not? Um, yeah, no, sorry, the one just in it, it's in like
This
mid-December,
one.
so it's like the
Mid-December.
yeah
Yeah,
there,
yeah,
and we
yeah,
were
yeah.
kind of like we were kind of doing stuff, but then not, and it was basically like, this is
Mm.
kind of on the knife edge, and then we had that like piece where I think everyone got excited about us breaking out, and then just we collapsed back down.
100%. And I think that, in bear markets or bull markets, doesn't matter which market, we have like a trend, right? Of course, this is a bear market, so the trend is down. But in the meantime, there's always like a choppy period and then sometimes a counter trend rally. And I think now we're like kind of completing like that last phase. So either here we're going to switch trend, which I personally still think is unlikely, or we're almost at the end of, our counter trend rally, and then we hopefully, in my perfect scenario, complete one more leg down. I will
Mm.
say though, the overall market seems very much at the tail end of the bear. Not saying
Yep.
that it's gonna be over soon, in my opinion, but I think we're like really getting closer. And some coins are attempting things, then they're failing. It's a really frustrating scenario, I think, for people that are expecting things from the market. I think it's a very conservative target scenario, of course, but I do think that this is the time that you really want to be paying attention to so many things like coins that you want to buy for the next cycle, maybe outperformers, just seeing already like which ones, are doing better, like both fundamentally, but also on the structure side. I know that you were looking at hype, which is definitely something I'm
Yeah.
like super interested in.
I think this is a super interesting chart.
Yeah, 100%.
Where we're at right now. We talked a bit about hype, I think in the last episode, and we couldn't quite figure out. It was kind of at that awkward zone where I think it was near its like previous all-time high, and yeah, and we were like, I just don't know where to go with this one. It just didn't feel like something you want to trade around that $60 mark. Um,
Yep.
but yeah,
Good
I
read.
tweeted
That
yes.
was.
Yeah, yeah, exactly. But yeah, I tweeted yesterday that I'd had some buys like filled basically around that red line that you've drawn out at, I think I got filled at 53.5. So it's kind of still in this like interesting zone. Um, but yeah, it certainly feels like, we should be coming into a demand zone here, and you would expect and hope if it's going to be bullish that we start to see it like grab some of that liquidity and move up.
Yeah.
Hasn't had like a big
I'm
response
not
so far.
no, I'm not seeing it. I think
Oh.
I don't think your entry will be bad for the longer term.
No.
I do think that you may be sitting with it for a while.
Yeah.
I just think the charts are not ready yet, will
Hmm.
be my read. Um, I'm personally on hype. I tweeted a scenario on this a while ago and it was a lot higher. And I initially said that I would love to buy the 1 day 200, which is now, of course, coming in around 50.
Yep.
I don't know if I would blindly bid it anymore. I, the way it's moving, it makes me mostly think it needs time. You see what I'm saying?
Hmm.
Like, not even
Yeah.
like that
Just
it
some like
has like a,
consolidation.
yeah, it doesn't even make me think we're gonna drop to like $40, even though I would love to buy that, obviously. I think
Yeah.
like this is, I saw Trader Main post about it a few times and people were hating him for
Yeah.
it, which is how you know it's a controversial topic, right? But I mean, ideally, of course, this is the zone also from a VIP perspective. That actually worked out really well the last time we did the same thing,
For
which
sure.
was exactly also that VIP zone, a little below it even. Yeah, and I know also I'm not sure like what is happening with it, but I saw a few people hinting at some fundamental stuff for hype that wasn't the best
Mm.
this week. I saw a tweet from Pentoshi. I didn't really like get into the detail of it, but to me that sounds really positive because I think that, any asset or company that's maturing will always have headwinds and just, things change and the early adopter or the people that were cheering for it because of that particular reason, they don't like it. But to me, it's like the fact that companies evolve is a really normal thing. Like that's just business, right? So if the other upsides, fundamentals for hyper are still there, I love if people are following it. Like, please send it lower, so we
Yeah, I
can
mean,
buy
this
it.
is, I know that we were discussing before we came on, you were sharing that with me, and I think the the TLDR, which in fairness, I think people are very much trying to connect dots that certainly haven't been connected yet, is that some of the infrastructure and stuff that they've been testing and building out would seem to be the kind of technology that you would build to support
Mm,
KYC. Now, I
gotcha.
agree with you, Dan, right? Like something like hype, okay, like one of the things that made hype so widely adopted on the perp side was its lack of KYC, right? But then
Mm,
that isn't the be all and end all. That none of the perp decks is like you never had to do KYC on GMX, right? Like, it's always been the case. And we
mm,
always knew that with a lot of the legislation coming in, and if hype was going to really get the scale that it was at, it was going to have to go through KYC at some point. It is going
yeah.
to have to do that. And
Yeah,
if
the
hype
same
does
for
it, everyone
Bybit.
else will.
And
Yeah.
yeah, there's also so many other companies that went through that same maturity process. And sure, it will be a bit of a dent in business for maybe a little bit. Some people will leave, but if you know what you're doing, you will shake it off. In this case, I definitely feel like that will be the case. Yeah, I'm super interested in buying this. High 40s will be like a very nice scenario already. Then building down. If we get some really strong like lower time frame stuff, I'll be down. But it's just this hanging in between. Don't know how I feel about
Yeah.
that. But it will really also
Yeah.
depend on Bitcoin and ETH. But then the other thing is that with BTC and ETH, I personally think that if ETH manages to break above here and like really successfully reclaim it and not do something like this, sure we have like some room to run, but I don't think that that room is like very far. So
No.
that's like
I mean,
another
there's a
issue.
ton of resistance that we're going to come up
So
against,
much
right?
resistance. Yeah, this is really that level on ETH, which will at the time where price will get there coincide with the 1 day 200. So like low 21s. And then the question is with hype, like maybe it does do something where we kind of like shut up like that, but then we do, you know what I mean?
Yeah.
I think like with hype, that's what I'm kind of scared of. I also know that a lot of good coins in previous transitions from bear to bull did really need like quite some time. Sure, hype
Yeah.
has been an exception, but this was also like a really long period, September towards end of January, you know?
Yep.
And this would give me like a lot of confidence. If we have a longer period of a slow bleed down, that's like my ideal scenario on hype. And I am like shoving money in it at
Yeah.
that point. Let's hope we get that. And then also for the people that are buying here and really believe in the strength, I think what you would want to see is like a reclaim of this structure here. Previous all-time high, this low, but then also the 1 day 100 in green and the daily trend. That would give confirmation that I'm waiting for nothing and we're continuing upwards.
Hmm. Yeah, and I think similar to you, if while I've already taken a pun, I mean I've like sized accordingly. And I think for me as well, a trade like this with hype is uh as a spot trade is more of a I'm cool with holding this for a little bit longer and like, if I'm holding on to this for 6 to 9 months, I have zero issue with that and I'll average down like if we get more
Yeah,
of a chance to hop in. But then also
perfect.
similarly, like if we did see a bit of a run up, um, I I would also be open to closing that out early because I do feel similarly to you that I don't think we're done with the bear market. There's like we've just said, the there's a lot of potholes ahead.
Mm,
If we get
yeah.
a rate cut in September, we're not going to see the headwinds for that in September's rate decision. This gets priced in like before. And I think that's always the most important thing to think about is like if we think about last year, all of the rate cut days that we had were nothing burgers. In fact, we actually mildly sold off on them because they were all 100% priced, well, like 95% priced in
Mm, yeah.
before. And that you combine that with the fact that typically September, high volatility period, just coming out the summer, we start to see
Yeah,
people
everyone
trading
coming
again.
back. Yeah, yeah.
Yeah, I really think that we are going to see a lot of volatility at the start of September because people are
Oh, I
going
would love
to,
that.
yeah, I think it's going to
Please.
be really exciting to
Give me
trade
some candles
because,
that move, please.
yeah, well, we'll have a load of economic data coming into it. There'll be a lot of discussion around the Fed, and like we will start to see, like, I have a bias towards macro here, but I really think paying close attention to 30-year yields is a really good indicator for how much the market is pricing in ahead of time what the long-term inflation impact is going to be and is a proxy for what we think the Fed is going to do.
Ooh,
So
you can
I
keep
think
us
it's
updated every 2 weeks.
yeah, I
Perfect.
think it's
Sounds
a
like a
good
plan.
one. It's a good one to keep close
Quant.
eye on.
I love that. No, it is yeah, I'm excited for that period, either up or down. I'm very much in the team of let's just rip the band-aid off, but I also know that, to go up, we need to go more sideways or even
Hmm.
down. That's like my read. It's interesting though, because we have some little outperformers. Uni is one of them.
Interesting.
This one is just doing his thing, and this is
Yeah,
kind of
actually
what
looks pretty
I
good.
it does, yeah. It's really nice because we can see these EMAs went from like down to flat and now slowly starting to point up, which
Yeah.
is what makes it like such a different situation than it was here, for instance. And I think that yeah, we discussed this many times already. I just think some assets will bottom out sooner than others. And it
Hmm.
will not be an easy, clean ride. We really saw that with something like Near, which did really well and then did really ugly.
Yeah,
And I
this
just
one's
think that,
really pulled back, hasn't it?
yeah. And I think this is like kind of that process, right? Where it's like not as linear as some people think. It's not always the case that we just reclaim and then we're off, to the races.
Hmm.
That's just not how these things go. I think Ando is a really good example here as well, where it really had those attempts a few times, and then we went below again and kind of like almost retesting that little low volatility range that I love to see. This is exactly what
Yeah.
I was just talking about in regards to Bitcoin and Ethereum. But I think yeah, these things take time and they're gonna look ugly and they're gonna be annoying. So I hope that people are like prepared for that. But that's a good thing though, because this usually what we see happen before more clean moves. And I think that
Mm.
this is just that last stage of the bear where it's like just so much headwinds and people are getting demotivated, they're getting stopped out. Like I'm in a lot of Discord groups and people are like not loving it this month. It's just tough. Yeah, it is. And I understand, they just want to trade. And they're good at it too. It's like they're narrative traders and they're good at it, but everything that goes up immediately gets slammed within 1.5 day, whereas they're used to, having like 9, 10 days of just riding a position. And that just hasn't been the case for a while.
Yeah, I mean, it was
Uh,
so nice the last week of June, first
yeah,
week of
that was
July. We
good.
had that like real nice high vol, like some of the highest vol we've had in quite a while,
Oh
and
yeah,
like bullish momentum as well, which is always nice for people.
for
Um,
sure.
I'm curious on pump and your take
Yes.
on
Me
this. I know
too.
that
A
we chatted
lot
a
of
bit
people
about this
asking
with
me
Follis,
about
didn't
it.
we? Mm,
Yeah, yeah, we did. I mean, hate it or love it, I know that Ellen is very controversial. I do think, what was it again that they implemented? The buybacks they already had. No, there was something positive that was happening. I have
yeah, I
such a bad
can't remember. I
memory.
think it was like to do with the fee structure or
Yeah,
something
something
along
like
those
that.
lines. Yeah.
Yeah, I mean, this is just one of those things like uni as well, right? Where it's making like that slow transition. Yeah, macro range low reclaim, EMA reclaim in the making, kind of having that first sign of clean market structure in a long time. Haven't seen that in a while. This was an attempt,
Mm,
but we only got the higher high, no higher low, as you can see. That was very ugly. So this is exciting. These are things we haven't seen in a little bit of time. But once again, I want to remind people that I think in this stage of the cycle, things are not as clean as they look often. And it will sometimes take assets like a few attempts to really get out of that bottom formation. But that is what the bottom formation actually is, right? It is the job and it is the sideways. So in that sense, it's probably necessary. But I just think market's really showing that it doesn't want to trend. I think VVV is another really good example. And this is why
I
I
was
was
looking at
kind
this
of,
chart last night, actually.
yeah. And this is why I was kind of wary to, or cautious to buy that retest on hype. Because although, this was like nice, also into this demand situation
Hmm.
almost, but it's not really like, sure, listen, it could save itself here, right? It's not
Yep.
impossible, but I still don't think that it's showing like that it really wants to trend. It's just, yeah, I don't know. You
Mm.
see what I'm
It's
saying?
right on the. It's it really is like an important point, right? It puts in like a lower low now. It's
Yeah,
yeah, it's just kind of
exactly.
lost that momentum, really, hasn't it? But yeah,
Yeah,
it's
and I
not super
think
convincing.
no, and I think it's just gonna probably build like this larger structure. And there's a lot of
It
good
looks a
coins that
little
are
bit
at great
like
levels, but
yeah, I was just
like,
going to say it looks a little bit like Nia a couple of weeks ago.
yeah, I see what you mean. Like that diagonal breakout attempt, and then it's
Yeah.
promising, but then wheel,
Yeah.
we go down again. Yeah, I mean, I'm not in a rush. I think it's also really important. I saw some people on that uni charts being like laughing at each other. You missed it, but then it's like zoom out. It's like missed what? You know what I mean?
Yeah.
And listen, I don't think any a lot of the altcoins are never gonna go back to any highs, maybe not even back to these highs.
No.
Um, but surely there is a moment where you will have like a nicer macro structure. A good
I
other
mean,
example is,
they're so depressed right now in
yeah, for
value
sure.
that like, even just taking, I mean, we talked a lot about picking and finding some of the first movers as well in a lot of this, which I think a lot of which we've discussed.
Mm,
But yeah, ENA was like one that we talked about loads in the bull
yeah,
market.
for sure. And I do think, and this is something I was just recording for the EMA series for Kraken Pro, is that when we talk about trends that are tired, this is what a tire trend looks like. And I'm talking about the bear trend, right? That has been intact
Mhm.
since, Jesus Christ, a very long
A
time.
while, a
And
while.
well, but we can see that we're pushing, pushing, but it's kind of like a bouncing ball a little bit, and they're starting to
Yeah,
get a little bit more flat. And eventually there's gonna come a moment where it can't hold it down anymore and where it's going to look a little bit more like bump. And I think one by one, the coins are going to do this, and maybe they will like fail again and they'll try again, fail again and they'll try again. But eventually, I think, especially considering the market timing that we're seeing now that how long are we into the bear? Like one
probably
and a
be
half
about
year?
7 or 8 months, maybe at this point, six, seven
No,
months.
longer, no? I feel for
Uh,
altcoins, feels
yeah,
longer.
because 10-10, you probably, yeah, probably about 9 months, maybe.
Yeah. Oh, I felt like it was much longer. But yeah, no, I
I mean,
think
yes,
that
it's been the longest 9 months of our lives.
yeah, maybe
Uh,
that's why it feels like double the time. No, but I think it all lines up with just the timing that this is, that last stage. So definitely, guys, like log off in the sense that like log off your exchange or log off uh, from the exchange where you hold most of your money or the account where you hold most of your money. But I wouldn't say like clock out because I do
mm,
think that with crypto, this is the moment where you want to be like doing your research and knowing like what's relevant, and kind of building those lists because I think Ansem tweeted about it. And although I slightly disagreed with his timing because he said something like every what was it? Every cycle, there's a time where everyone's asleep at the wheel and you can buy things that make you like super rich later on. This is the time.
mm.
Yeah, and I think maybe he's slightly early with that tweet, but overall, zooming out, I think it makes sense to think that
Yeah, I
way
think
for
that,
sure.
he's either called it as being like that June period, I think like mid-June when we saw BTC break 60, or we've got another low to put in, and I lean in the same camp as you, Dan. Like I feel like I've got a higher probability of filling a 55K BTC order than I do a 75K BTC order first. It's
Yeah,
typically where I'm at,
agreed. Yeah, but it's just starting to
which I
look.
wouldn't hate. I wouldn't hate
No,
that.
I wouldn't hate that at all. Wouldn't hate that at all. So yeah, let's see what the next few weeks bring. I will say, looking at this lower time frame we just marked out on BTC and ETH, what we want to see to be convinced that we get that slightly higher leg up. I can see a scenario where we do that, but right now we're at that decision point and we're not deciding. So
Hmm.
probably, this weekend at the end of it, we'll know whether we're going to do that or not. ETH is in the exact same spot on a lower time frame. I would hold those levels and the breakout or rejection of those as kind of your North Star for whether you want to have some sort of exposure in the next few weeks. If we can do like successful reclaims, I think we can have like a little bit of fun. But if we reject again, then I think it's mostly going to be chop in the best case and down in the worst.
Yeah. Well, a perfect way for us to wrap things up. I think, we've got still the rest of today and tomorrow, I think, for the market digest a lot of the inflation data that's really still pretty fresh, only a couple of hours old. So we'll see how the day settles out. It's not uncommon for us to see a complete reversal on the first move of some of these as things get processed. But we will be back again within the next couple of weeks to dive straight back in and have a look where we play out. As always, thanks so much, Dan, for all of the great analysis today. Thanks everyone for tuning in. We'll of course get the replay coming out on X really soon after we wrap this up. Make sure that you follow at Kraken Pro and at Kraken FX to stay up to date with everything coming out there. Follow at Dentoshi as well on X. And we will see you all again, including yourself, Dan, for the next episode we host.
Yes, please. Have a great weekend ahead, everyone.